Coming up on Market to Market, a South American staple captures a piece of the domestic market. World Food Prize laureates take center stage. And a supermarket chain slows landfill growth by turning waste into cash. Those stories and market analysis with Elaine and Walt Hackney next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, October 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Like it or not, the holiday shopping season has begun. For some, it's hard to consider purchasing anything for upcoming December celebrations, while others have easily parted with their hard-earned cash. Commerce Department data shows lower gasoline prices helped push retail sales 0.6% higher in September. Even after discounting cars purchased to fill with that cheaper fuel, overall growth rose 0.5%. The Labor Department reported the Producer Price Index rose 0.3% on the back of rising crude prices. Without energy and food, core PPI climbed 0.2%. Getting a good price often runs neck and neck with making something affordable. African farmers face this battle daily. The desire to make a profit is often pitted against filling hungry mouths. Norman Borlaug's work helped save 1 billion of those lives working on this puzzle, and many have followed in his footsteps. This week, work by Maria Andrade, Robert Mwanga, Jan Lowe, and Howarth Boyce was recognized with a jointly received World Food Prize. The four will split the $250,000 purse for their development of vitamin A-enriched sweet potatoes and assorted pulse crops. Staple foods often find a niche in other places. Quinoa is a good example. The small grain's high omega-3 content makes it attractive to the U.S. health food market. In short supply, U.S. farmers are taking a shot at raising the South American staple. Tracy Brown of the Associated Press reports.
A first for this Washington state farm.
That's a good section.
Harvesting quinoa. After 5 decades growing everything from cabbage to wheat, Nash Huber recently finished harvesting the South American grain.
It's a beautiful crop.
With demand growing for quinoa, a small number of American farmers are testing out the crop.
We're in the early stages here, still learning. You know, this is, I kind of stepped off the end of the dock here with a little bit of a bite this year.
More than 90% of the quinoa supply comes from Peru and Bolivia. But Americans consume more than half the global production of quinoa, the edible seeds known for their nutritional value.
It's got all of the amino acids that humans need, so it's a complete protein, and that's really hard to find in grain crops.
16, 23, 27.
It's also been a challenge finding the right way to grow it in the U.S. Washington State University researchers are testing varieties that can withstand heat, along with late summer rains without sprouting.
I think to have large acreage, a lot of farmers throughout the U.S. growing quinoa, it'll take some new variety development that works for the different regions.
While quinoa has been a boon for the economies of Peru and Bolivia, generating $111 million in 2012, recent overproduction has caused prices to drop, straining farmers, especially small ones.
The
lower quinoa prices has affected them because it takes a lot of money to cultivate quinoa, more than other crops.
Quinoa's diversity is part of the appeal for farmers like Huber.
I hope I break even. You know, if we break even, make a little money, that'll be good, because I've learned quite a few things here.
A learning experience that could help reshape the future of quinoa on U.S. soil. Tracy Brown, Associated Press.
What to do with dinner time leftovers? Some of it can be saved for use on another day, but much of it finds its way into the trash. According to the Environmental Protection Agency, waste in the hundreds of millions of tons is sent to an ever-diminishing landfill space every year. However, as producer Peter Tubbs found out, that waste can be turned into a wad of cash.
The breakfast rush is over at the Hy-Vee grocery store hot food counter in Waukee, Iowa, and the breakfast pizza won't be saved for tomorrow. But rather than being tossed in the trash and sent to a landfill, it joins the other organic waste this store generates in a trip to a regional recycling center.
Right now, up to 72% of waste coming from a city waste stream is organic material that can all be diverted from a landfill. We have a lot of customers who have corporate sustainability goals, zero waste goals, and a lot of times their hardest objects to get out of there are going to be the organic ones. They can do the plastic, they can do the cardboard, they can do the metal, so on and so forth. But when it comes to organic material, they don't have a place for that to go. So Green RU is a great option.
Hy-Vee, which operates 242 grocery stores in 8 Midwestern states, is among several companies seeking alternatives to sending organic waste to landfills. The zero waste goal is a growing trend among businesses and has opened a market opportunity for Green RU. As the volume of material available for composting increases, the demand for inexpensive compost is also growing. Green RU compost can be used for landscaping and residential locations, as well as a soil amendment in agricultural settings. Composting is favored by customers and employees instead of sending waste to landfills.
And we quickly learned that our employees felt very engaged in the whole sustainability effort. They knew the value of diverting to lower the methane that is coming out of the landfill. They understand the importance of lowering your carbon footprint. And to work for an employer that cares about that was important to them, is important to them. We know it's more the right thing to do is to maximize our opportunities for landfill diversion.
Employee participation is a key to diverting appropriate waste into the compostable stream. A grocery store generates a large amount of waste in nominal terms. While a small percentage of goods sold, a single Hy-Vee grocery store can send 30,000 pounds of material into the composting stream each month. Products are routinely pulled from shelves ahead of their sell-by dates. Some of the pulled products are distributed to social service groups and nonprofits that focus on food insecurity.
So that's our first priority, is to get the edible unsellable to consumers who can use it. Once it gets to the point of spoilage, that it's no longer viable for human consumption, of course, then we put that in the landfill diversion with the compost, and that was 12 million pounds.
Compostable materials are collected in the back of the store in a separate dumpster from the landfill-bound trash. A custom-built service truck empties the specialized receptacle several times a week, depending on the volume of waste the store generates. Trucks travel with their own water supply for cleaning the empty dumpsters after each load. The organic waste is eventually blended with ground wood products to achieve a specific mix that encourages the decomposition process. At this 18-acre Green RU facility near Eddyville, Iowa, windrows 700 feet long are slowly turned to aerate the organic material. Some compost recipes can become finished product in as little as 8 weeks, while others require 12 to 14 weeks to finish. Food waste is valuable to the chemistry of composting, with its high nitrogen and moisture content. The nitrogen in water speed the decomposition process when mixed with ground-up wood products, which are mostly carbon. As the decomposition process proceeds, the carbon-to-nitrogen ratio shifts from 30 to 1 to the 15 to 1 range, which is valuable for both agricultural and residential consumers. While demand for finished compost is important, Hy-Vee officials are always seeking a competitive rate compared to sending everything to the landfill.
We have a lot of customers that find it to be cost neutral. It's a very affordable program. Even some have cost savings by diverting that waste from going to the landfill to compost. The number one thing though with our customers is you'll find out is that their main goal isn't the cost, it's they want to do the right thing. They want to be have a sustainable future, and their number one thing is zero waste. So at Green RU, that is our number one goal, is to provide that customer service.
cost neutrality may be a long-term advantage produced by Green RU. The company essentially bids for different types of compostable waste using a sliding fee scale. Some waste streams are more valuable to Green RU for what the stream brings to the composting process than others. The composting option may make more and more economic sense. Slowing the volume of waste destined for landfills means lower garbage costs for homes and businesses, and fewer acres of rural America devoted to the burying of trash.
Since our landfills are filling up quickly, we are taking what was once thought as a waste, zero value, and we're creating it into something with an environmental benefit in compost.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
The trade appeared to have already factored in the midweek supply and demand report. However, fund short covering, end user demand, and spillover from the wheat market all served to move the commodity markets higher. For the week, December wheat gained 27 cents, and the nearby corn contract moved 15 cents higher. Soybeans followed wheat and corn as the November contract rose a tepid 6 cents. December meal tagged along, gaining 40 cents per ton. In the softs, December cotton moved $3.59 per hundredweight higher. Over in the dairy parlor, November Class 3 milk futures fell 38 cents. In the livestock sector, prices finished decidedly lower as the December cattle contract dropped $5.60. November feeders plummeted $7.13, and the December lean hog contract declined 37 cents, adding to 7 weeks of losses. In the currency markets, the U.S. dollar index soared 134 basis points. Crude oil advanced 54 cents per barrel to finish over $50 for the first time since July of 2015. Gold added $3.60 per ounce, and the Goldman Sachs Commodity Index increased a little more than 2 points to finish the week at 376.05. Here now to lend us their insight on these and other trends are two of our regular market analysts, Elaine Cubb and Walt Hackney. Elaine, Walt, welcome back.
Good to see you.
It's good to have you both here. And we picked, well, it's an exciting day for Elaine as we look at these grain markets. Is sentiment changing in these markets? We're up across the board. First week we've seen that in quite a while.
Possibly, and I think in wheat particularly, it's interesting that we do start to see these day-by-day gains. And if I had to guess why, I would say structurally, in the preceding weeks, the speculators had built up hugely short bearish positions, like 3 times as many bearish positions as bullish positions, which is the worst it's been in a decade. And so when you see the entire sector, soybeans or corn or whatever, spooking wheat even up a few cents, that would really unsettle some of these speculators. And I think that that's why you're seeing short covering. And I think that's probably what is explaining some of these higher prices, and also just the fact that it's quite cheap and you might as well buy it when it's this cheap.
Now, once we start to get the ball rolling in a trend, whether it's wheat or corn or beans, but here we're looking at the wheat market, there's still a very, very large amount of shorts out there.
Yes.
Do you expect this short covering to continue on through next week, take us up to, can we make 450 in the Chicago contract?
I was going to say, yes, we might expect to see the short covering continue, but I don't want to get real bullish on prices because fundamentally we still have to accept the fact that these are quite bearish times for wheat. And in the Kansas City market in particular, let's say you got futures to go up to 450 in the futures side. The basis out in Kansas is $1.40 under, and it would just get worse. I mean, it's not good news. So the wheat's not worth anything. They're planting it, but maybe they're going to graze more of it, and maybe Walt can address that. I don't know if they're going to do that either because the cows aren't worth anything, right? So it's just not a lot of good news in the wheat market.
All right. Do you anticipate wheat acres to come down here, maybe not this winter, but as we get into spring or next year?
Right. When you look at the planting pace, nobody seems to be reacting to the fact that it's not worth anything. But the question is how much of that does get grazed?
All right. And how much is harvested?
Yeah.
Well, let's take a look at this corn market. We had an exciting week in the corn market. Post supply and demand report came in, from my understanding, pretty much in line with trade expectations.
Yep. Nobody was too surprised there. They said 173.4 for a nationwide average yield, and that's the second trim that they've done since August. So they've kind of been trimming it. It's still a very large crop, over 15 billion bushels, so we have lots of corn.
The report came out on Wednesday. Thursday, we saw the largest move higher in corn since July. Elaine Cub, 12 cents to the upside. And then we followed through with a little more strength today, closed above 350.
Yep.
Does that tell you we're again starting a new trend?
It's like you say, that you do start to think that we have shifted. And seasonally, that can make some sense. When you get into a normal year or a year of normally large crops, you might see a seasonal low there at the end of August, or you might see a seasonal low in November if the crop gets bigger, you know. But if we are saying that the USDA has captured conventional wisdom here and captured some reality that we're seeing from harvest reports, then anecdotes are not data, but if you get enough anecdotes together, they become data, then yes, that's true, that we're trimming it a little bit, and so maybe that August 30, the end of August low, maybe that was it.
Okay, so as producers, we're out there in the field, we're weighing what to store, looking at, by all accounts, a pretty good-sized bean crop. In your mind, sitting here at 354 in the December corn contract, is the risk to the downside or is the risk to the upside?
It's a little of both. I'm still neutral. I'm still not saying that you can tuck this away and expect to see 450 corn at any time soon unless something strange changes about the weather. Now, we did see the NOAA this week has said that they are looking at a La Nina, a 70% chance of a La Nina, but it's a weak one and probably very quick and small, so we can't get really bulled up about the South American crop yet. But that's a maybe.
Okay, well now speaking of South America, we have a question here from one of our followers on Facebook. This is from Sue in Red Wing, Minnesota. Sue is asking, how is foreign production going to be affecting us in 2017? As folks are in the cab, they're planning for next spring's plantings. What should we keep in mind?
Well, you will see more corn coming out of Brazil earlier in that first crop because they have the urgent need for it because they had so little of it last year. So they're already seeing that in their planting, but weather-wise, the planting is going okay. In fact, it's a little bit dry, and if this La Nina materializes over the next month or two, it will continue to be a little bit dry. So it is possible that we could get some sort of a boost here even before the end of the year, but there's no reason to think that yet. If I was a speculator trading on a La Nina pattern, I wouldn't do it yet.
Okay. All right. Well, now let's talk about the soybean market. USDA, again on Wednesday, did increase their national average yield expectation. They bumped it up just about a bushel, just right shy of a bushel. And beans held on, actually climbed up a little bit post that report. What does that tell you about this market?
It tells me that we're shipping it out. The exports, and they were favorable this morning. That was good news for both bean and corns, actually. We're a faster pace than last year at this time. So yeah, soybeans, that's not great. That's not a bad situation for soybeans there, yeah.
Okay, so as producers, same question. We're out there in the combine. Bean yields are looking good. What do I store? What do I sell? Beans, corn.
The obvious answer, just looking at the spreads, would be to store the corn. Store the wheat if you can store the wheat because those spreads are very large. But between corn and soybeans, you would get rid of the soybeans and store the corn. But price-wise, they're, we talked about this last time I was on about the price ratio between them. It is a little more normal than it was the last time I was here, but you're still better off taking the money on the soybeans. You're more motivated to sell those soybeans at these price levels. Would
you look to re-own those soybeans on the board in any way?
I wouldn't yet. I mean, there's nothing bullish enough to think that it's going to break out of this 960 sort of trench that it is in, just very sideways, neutral outlook, I think.
Okay. Now, Elaine, we also had an interesting week in the cotton market. Climbed $3 and almost 60 cents on the week. What happened?
Well, I think honestly it might have been responding to a positive WASDE report. That might be a report where the fundamentals from the USDA this week cut the ending stocks, but they're still quite large, like a 28% stocks to use ratio. So it's still overall bearish, but these little trims, they increased the exports from the U.S. enough that maybe that was a response to those fundamental numbers.
Do we see that continuing on into next week or beyond?
I don't think so. Again, I think we're in a neutral outlook, pretty well stuck there because, like I said, overall, it's still a bearish market.
This pushed us to the top of the range, make some sales.
That'd be a good time for that, yep.
Okay. Well, thank you, Elaine. Now we got to turn our conversation here over to Walt Hackney. Now, Walt, Elaine had the fun part. She had higher markets all across the board.
Yeah.
The question I want to throw to you that I get asked all the time, and then when I stand and look at my pen of calves, where's the bottom, Walt Hackney, in this live cattle market?
I believe that we're near it or at it as we speak, Mike. We, as you know and as everyone knows, we've had a catastrophic drop in the values of feeder cattle, and then again in the values of fat cattle out of the feedlots. Part of it may be earned, and part of it is probably almost criminal, the amount of profit that has accompanied the feedlot cattle through the packing house process, and then again into the retail sector. Phenomenal returns. To say how much per head that they're making, if you will, on those feedlot cattle, every analyst has got a better figure, but $200, $300 a head that they can make on these cattle, they claim. They being analysts who seem to have access to some of the numbers. Obviously, they're not going to get them through those entities that have the product. Feeder cattle, it's an interesting thing, if you will. I'm buying 5.5 to 6.5 weight calves today under contract for next month delivery out of Montana, Wyoming, Colorado. Mike, I'm buying calves $150 a hundredweight under what those same calves brought last year. Now, that's historical, it's catastrophic, but in the case of those cattle in the rancher side, they're still bringing $1.25 to $1.35, and you look at the cash flow needs of the rancher, those calves are accompanying that cash flow and carrying him.
They're still profitable.
They're still.
And that's the next question, Walt. As we look at this market, lives continue to fall apart, feeders are dropping, but the market hasn't said stop growing. You know, I've heard, again, analysts expect that most ranchers or cow-calf producers are making $100 a head on their cow inventory. When do we stop growing this cow herd?
Well, I think that's a misnomer. I don't see that cow herd under any kind of an exceptional growth pattern at all. The reasoning being, a lot of ranchers historically, and Elaine and I were talking about this, historically, over time, that rancher will take out the lesser cows each year out of his cow herd and replace them with those selected heifer calves out of his herd. And that's been a decent practice. He's got he retains his genetics, he's got everything on his side. Now, it doesn't even make sense to do it because the cow is practically worth nothing. And if they sell her, that heifer calf coming in there, she's got to climb over financially what he's losing by selling that cow. She's got 2 calves, maybe 3 left in her. And so he's going to keep them.
All right.
And so you see a lot of extraordinary liquidation of the heifer calves. And it's coming now to me. All summer I've been contracting the steer side out of these herds in those states, and several of them. Now the ranchers are calling saying, Walt, of my 400 head of calves, let's say that there's 200 of those heifers in there, and I'm not going to keep half of them, 100 head even. I want you to, I'd like to sell them. A lot of that is going on.
So they'd held them off thinking, we get a bounce in the cull cow market,
Exactly.
We'll bring these girls in.
It was pending on the cull cow market, not on the value of that heifer calf, but pending on what that old cow would bring.
Cull cow's going to bring any more money here this fourth quarter?
I doubt it.
Okay.
I don't see any, there's no incentive there in the market. There really isn't any incentive that way.
Okay.
One reason being, hamburger, as we speak, has been the driving force behind those culled cows. And the beef cuts the loins, et cetera, have been more or less luxury beef prices. Now, the prices coming down in the retail on those primal cuts, and they're competing with hamburger.
Gotcha. And speaking of competing with hamburger, we've got cheaper and cheaper hogs out there as well fighting that battle. Are we close to a bottom in this hog market?
I don't believe we are.
Okay.
I believe that we're looking at, you see, we're only, if you watch the FIS, you're only looking at 390 to 395,000 hogs the last few days. All of a sudden, we went to that level from 425 to 35,000 head a day. Well, it isn't that we're out of those hogs, it is that the market has dictated to the packer that their profits have went from here to here. They're still making money, but they're going to gear their production to the amount of hogs they buy.
Gotcha. And so they'll probably start...
They'll make them heavier.
Exactly. All right. Well, Walt Hackney, Elaine Cub, thank you both so much for joining us.
Yeah.
That wraps up the broadcast portion of Market to Market, but Elaine, Walt, and I will keep the market conversation going, including answering more of your questions during Market Plus, which you can find on our website. And this week on the M2M podcast, you'll hear how changes in commodity trading technology have affected Sue Martin. You'll get it wherever you find podcasts by searching MTOM. And join us again next week when we explore farm trade prospects in light of thawing diplomacy between the U.S. and Cuba. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.